Okay, can y'all hear me now? Yay! All right. So, well, welcome to Accounting live lecture. Just so y'all know, most of the time I do Google Hangouts, but they're really stressing the live lectures. I kind of like the Google Hangouts because they're more intimate. You can. Oh, thank you, Christy. It's actually my actual hair color. So I'm natural for the first time in like 5 years. It's kind of scary. I kind of like the Google Hangouts in the fact that you can hear each other, ask questions, come back and forth, and I'm not having to read your comments and try to respond and everything. But I'm really excited about our new accounting system. We have completely revamped this program. So the great thing is, I feel like it gives you more meat of what accounting is about and a really good baseline. So I'm really excited about these changes. I am so looking forward to this. If you have not had a Connect class before, it's really neat in the fact that it grades it right then. So you know how you have done. Now, this course has some My Course Connection assignments to where you're actually going to have to do your discussions and 1 or 2 assignments through My Course. The two do not link. What I have to do is actually go in and grade your My Course. Then after your assignments are due for any Connect assignments, I go in and actually sync it to the gradebook, and then the two will come together. So in your grades, you will see it. Another issue is when we set up a class, if Instructor Cook sets up the class, it's his class. So when you go into Connect, you're going to see everything saying Will Cook. Even though I'm instructing the class, the emails and everything will still come to me. So don't let that throw you off. I think that's really it. And of course the videos are completely new, and Instructor Cook has done those as well. He's done an excellent job. Accounting is kind of his forte. He really loves it. For those of you that are afraid of accounting, don't be. Accounting is not math. Yes, there's a little bit of math involved. You still have to know that 2 + 2 = 4. But the way I like to describe accounting is figuring out what egg to put in which basket. It's all about categorization. And knowing what category to put everything in is going to determine and allow you to know, okay, am I making money? Did I lose money? Am I making money in one area but losing money in the other? And you're gonna understand that more as you go through. So don't stress out if it's, oh my goodness, I got into math. It's not about math. It's about knowing what category to put everything in. So I really like to say it's about eggs and baskets. Are they small eggs? Are they medium? Are they large? Are they extra large? Are they Eggland's Best? And where do you put them? And that's what I like to know about. Stephanie, I promise you, you're going to do great. Same thing, Itzy. On my Course Connection, it has my email. I give that to you for a reason. Please, please, please reach out to me. You can text me, you can email me, you can call me. That's why I'm here. And that's why I make myself available so much, is I want you to be able to reach out to me when you need me. So let me write down really quickly who so far is in the course. Hey Brittany, I'm excited that you're in here. Yay! J.O. Itzy, Candace. Looks like we have a pretty full class. Phew. Arthur, Stephanie. I know I can always go back and find this, but I just always rather. Tanisha. And Taylor. All right, excellent. Brittany, don't worry about having to put the baby to sleep. I'm just excited that you're here. So, okay. So have any of you actually watched any of the 2 videos so far? Okay, about half and half. Your first assignment is going to be, there's a discussion 1.1 due tonight. Now we've kind of changed some things to where your discussion is due on Tuesday for your initial post. I think week 3 is the only week that we have 2 discussions. So your next initial discussion is due on that Thursday. And then all peer posts are due on Saturday. So we're looking at doing that. That way everybody has time to actually post their response. And then you can go in and see what everybody's doing and not trying to, okay, it's 9 o'clock, I've got to respond to someone, and you respond to the first 2 people there. So hopefully that's going to allow some more give and take. I'm really encouraging you, don't just look at 2 people and respond. Really read the comments and respond to all of them. This is your time to feel like you're in a classroom going back and forth. As always, no late discussions are accepted. So if you miss the initial discussion on Tuesday, you cannot get points for that. However, you have until Saturday, you can still go in and post your 2 peers. That's going to work. So that's a great thing. So instead of just losing 30 points, you still have the opportunity to get another 10. If you miss live lectures and you have to watch the recording, I understand that. Life happens. Not everybody's schedule is the same. You have 48 hours to post your summary. No late summaries are accepted. I really encourage you next week to bring in questions for what we did this week as well as what's happening next week. And it's only fair for the individuals that have really been working on everything to be able to ask and know what's going on, and us not spending time going over someone that's behind because they haven't done the work. So that's one reason. Other than that, any late assignments are accepted. However, there is a 10% grade reduction for every day. This is automatically processed by Connect. Now, I understand everybody has life events going on. Give me a call. Let me know what's going on. If there's something that I can assist you with, I will. If someone has been in the hospital or there's been a death or something, I can go in and manually change those if I need to. But just because you're watching NCIS, which I love, and I'm missing so that I can do this, that's not a good enough reason. Oh, Heather, don't worry about it. I'm glad you're here. I was a little late too because I have not taught a class for 2 months. Took a little hiatus, and I had to update Blackboard too. So yay, I'm glad you're here. Okay, so let's get to it. I really want you to give back and forth, so please do everything you can. So I've loaded the PowerPoints for chapters 1 and chapter 2. We're not necessarily going to go through all 34 of them, so don't stress out. I don't want you to go, oh my Lanta, will deal. Okay, so college accounting, a contemporary approach. Let's see. Let me see if I can get this to move the way I want it to. Nope. Okay, there we go. So what is accounting? Well, it's the language of business. And part of what accounting is it's going to, actually, you're going to be able to, anybody can say my business is doing great. Well, when you walk into the bank and they go, well, that's great, how do you tell me that your business is doing great? Accounting is the reports and the financial information that backs up how your business is doing. It doesn't matter how small your business is. It doesn't matter if you're a lawn and garden company or a cosmetologist or you're a freelance paralegal. You need to have your books done. You need to do your books every month and at the end of the year. 1, for the IRS, 2, for the bank, and 3, maybe you need to buy a car. Maybe you need to buy a house. You can't just walk in and go, well, my bank account looks really good. What is the true, where's things actually at? And that's what accounting is going to be. It's kind of like I like to say, it's your personal budget on steroids. So in this section, we're going to define accounting, identify and discuss career opportunities in accounting, and identify the users of financial information. It sounds pretty easy, but there really are different people that do different things. Okay, there we go. So when you're running a business, you need to know how much cash does the business have, how much money do customers owe the business, what is the cost of the merchandise sold. Yes, this affects you if you're a hairstylist. If you are buying perms for $5 a box, how much do I need to sell that perm for? If I bought a bunch of hair color that I'm not using, how much can I mark down the hair color so that I'm actually still covering the cost of it but making money? What is the change in sales volume? You know, do I do more hair colors than I do perms? Do I do more cuts? You know, paralegal, do I do more wills? Do I do more custody? What do I do? And how much money do you owe your suppliers? So just like when you get your paycheck, you're like, woohoo, I got money. Well, yeah, but you got to pay your mortgage and your car payment and your insurance and utilities like money. And then you're like, I have money left over and I can go to the movie. It's the same thing for a business. As y'all can tell, I talk with my hands. No, I'm not Italian. And what is the profit or loss? Guys, it's really easy. If you have a positive balance in your account, hallelujah, you've made money. If you have a negative balance in your account, you've lost money. And if you are zero, that is actually in business is a good thing. That means that you broke even. And you've got to break even before you can make money. So, not a bad thing. Is everybody understanding everything so far? Woohoo! So accounting is this process by which financial information about a business is classified, recorded, summarized, interpreted, and communicated to owners, managers, and other interested parties. Remember, interested parties is the bank, the IRS, maybe you're a corporation or a partnership, that's your partners or your board of trustees. Maybe it's your husband, maybe he's your partner. You know, you want to go, yeah, my Cincy business is doing great. He wants to know that you're actually making enough money to pay for your hobby. And it's the same situation. So, of course, with accounting, you can be an accounting clerk, a bookkeeper, an accountant. You can be a business owner. Even if you're going to have someone do your books, and I recommend you get a CPA, you still need accounting because you need to know what they're handing you. You don't want them to just go, okay, did I make money? And they go, yes. You want to be able to look at it and say, okay, I did. Or I like to use the example as a lawn care company. Maybe you have a lawn care side and then you have a landscaping side. Maybe you're making more money under the landscaping side than you are the lawn care, but the lawn care has more wages and payroll. So maybe that's when you need to look at, okay, I need to change the way that we're doing business so I can marginalize and increase the profit under the landscaping because that's the direction to go. It's little things like that. So managerial accounting, involves establishing accounting policies, financial advice to management, accounting systems, interpreting financial statements, kind of what I was talking about. You don't want to just be told you're making money. How am I making money? Where am I making money? Where can I make more money at? Preparing tax forms and internal reports. Let's see, wait a minute. Okay. So the other part of accounting is we're going to compare and contrast 3 types of business entities and describe the process used in generally accepted accounting principles. So there's a couple of different business entities. There's actually kind of 4. It says 3, but there's 4. There's a partnership, which means 2 or more people involved in a business. There's a sole proprietorship, which is 1 person only. It is Leonda Clement's business. No one has any say in what's going on. Partnership would be Clement's business, so it's my husband and myself. Maybe when my son gets older, my son joins us. You can have 2 partners, you can have 100 partners. Partnership is not limited by size. And then there's corporation. A corporation could be 1 person, it could be hundreds, it could be thousands. Now the thing that I love for small businesses is the S Corp or LLC, which is limited liability company. And that's what most small businesses should always do. So there's a couple of things that set them apart. A sole proprietorship ends when you close it or when you die. And you're 100% responsible for the debts of the firm. So if you own A+ Lawn Service and you run over your best customer's prize poodle and kill it, she can sue you, not only the business, but personally for everything that you own because you killed Fluffy. So how do you protect yourself? Well, 1, don't run over a poodle. And 2, an LLC, you're limited liability. So they can sue the company, they cannot take your house, they cannot take your retirement. You're limited with liability. So that's the great part. But you still control everything. So same thing, no one's really having to tell you what's going on. You can still make your own decisions. You're just financially a little bit more sounder. The business bills are the business bills. So that's great because there's no muddling of anything. If I owned A+ Lawn Service and went out and racked up a big account where I was buying gas, but I signed for it and I was sole proprietorship and I closed the doors, I still have to pay that. So my creditors can come sue me. We don't want that. And then partnership, it ends with the partnership dies, withdraws, close. And corporation continues indefinitely. It just keeps going and going and going. You can have stockholders, you can have 1 stockholder, it really doesn't matter. Okay, any questions so far? Okay. Do any of you use or work in the accounting field? No, 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 no. Okay, that's a resounding no. Do any of you want to be accountants or work in accounting? It's a no. Okay, yeah, sorta. See, I love numbers too because 2 plus 2 is always 4 unless it's Common Core. Okay. And that's what I love about math is it doesn't lie. Accounting does not lie. Business finance, that's a different story. Okay. All right. So, there's a couple of generally accepted accounting principles known as GAAP, and they are accounting standards developed and applied by professional accountants. And that's so the accounting system in Oklahoma, Texas, Nebraska is all the same. Guys, accounting goes back to the Franciscan monks. I mean, it's old, 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 old. So it's not new. And there's even international accounting standards. So that if you go to England or you go to Russia, it's the same thing. A debit is a debit, a credit is a credit. It doesn't matter where you're at. Now, one of the things to keep in mind, this is not your checkbook. What you enter into your checkbook or your account, when you get your paychecks, you credit your account and you're positive. And when you pay your bills, you debit it and you're negative. This isn't that way. So it gets a little confusing, but in your book, there is, what did I do with my book? If y'all, yes, I use the term y'all, so I apologize. If you do not have this, let me know, and I will email it to you. But if you go to the very back of your book, so when you download it, go to the very back, and you should have kind of like this template. And I call it accounting cheat sheet. So it's the rules of debit and credit for permanent accounts and temporary accounts. So the great thing about this is it's going to tell you what an asset is and what a debit is, and is it going to increase it, and is it going to decrease it, depending on whether it's an asset or liability. And it kind of breaks it down. And I love it because it will help walk you through items. So later tonight, go to the very, very back of your book, and if that's there, great. If not, let me know and I will send it out to y'all. It even gives you little examples of what is considered an asset, what is considered equity, etc. Okay. Okay, so that is that for, let me see. Okay, so let me go. I'm going to go load Accounting Chapter 2. Bear with me. Okay, so part of analyzing business transactions is recording the equation and inform the financial effects of the business transaction. That means defining, identifying, and understanding relationships between assets, liabilities, and owner's equity. Guys, this is a great thing. The accounting equation is always the same. And you can always, whatever's missing, you can find the other. So, and we're going to go over that. So, part of accounting is you're describing the financial event. Did you buy something? Identifying property. Who owns the property? Determining the amount of increase or decrease. And we're going to make sure that it is in balance. So, property asset equals financial interest. And what is an asset? Well, part of being an asset is if I sold, can I sell it? Did I buy it? Did I receive it? Can I sell it? If I had to sell everything to pay my bills, what assets can I sell? That helps you make what's an asset. And so, let's see, what else do I like? So assets are property owned by a business. Now, it can, keep in mind, assets can be a building, it can be a car, it could be a backhoe, it could be a number of things. It doesn't have to be what we necessarily consider assets. It could be your stock for hair color. As long as it's paid for, it's yours. It's an asset. You have inventory. Liabilities are debts or obligations of a business. Okay, so if you had to buy that hair supplies, but you still owe for it, it's a liability. It's a debt. You have a bill for it. Once the bill is paid, it's not a debt anymore. It's an asset. What is owner's equity? Well, owner's equity is the term used by sole proprietorship. It is the financial interest of an owner of a business. It's also called proprietorship or net worth. So don't get confused when you are adding cash, debiting or crediting cash. You're not going to immediately debit or credit owner's equity. That is rarely touched. That is touched when the owner makes a true investment or purchase into the company. Maybe the owner bought a car personally and gave it to the company, or the owner decided they wanted to take a vacation and wanted to make a withdrawal from the company. Not paycheck, but I'm literally taking money out of my company so that I can do what I want to. Those are the only times that owner's equity is touched in itself. You have to report it, but it's not touched every time that you do a transaction. And of course, balance sheet is a formal report of financial position of a business on certain dates. So, let me see. The fundamental accounting equation is always assets equals liabilities plus owner's equity. Now, like I said, this is the great thing. If you can't find out what assets are, that's okay. If you know what liabilities and owner's equity is, you know what assets are. If you know what assets are and owner's equity but not liabilities, you can always figure it out. It's an algebraic equation. If you have two of the sides, you can always find the missing part. Okay, any questions so far? How many of y'all are bored? Really? No one wants to respond? Okay. I try to keep things interesting, guys. Okay, perfect. So, now, oh, I wish I could see the twins. That's what I miss about Google Hangouts, and I could see them. On this one, I can't. So, hi, twins. Brittany has the cutest little babies. They are absolutely adorable. They are amazing. I miss them. They're just so cute. It almost makes you want to have kids. Okay. Oh, Bailey, you have twins too? Oh, that's cool. Wow. Okay, you and Brittany just need to have your own support group. And by the way, guys, I'm really proud of Brittany. This is her last class, and then she will have her associate's degree. So way to go, Brittany. All right, yay, Heather. I forgot you're done too. All right. Wow, Bailey, I don't think I had you for math, so congratulations. Last class, yay! Well, y'all are going to end on a high note, so I'm really excited about that. And for the ones that are in the middle or just starting, see, it can be done. And it can be done with twins that are under 2. So, how exciting. Okay, so I'm going to look at some of the things I want to talk about. Now, one of the things that we're going to do is before we threw you straight into equations, and now you're going to actually start identifying what's an asset, what's a liability. Do I debit it? Do I credit it? And that's one of the things I love about this revamp is you're identifying the transaction before you start doing the transaction. Now, part of that is what is revenue? It sounds really simple, but it can get confusing. A revenue is an inflow of money or asset that results from the sale of goods or services, from the use of money or property. It's also called income. So here's where it kind of gets tricky. Until you perform a service, it's not revenue. Once you perform a service, it's revenue. So a good example is gift cards. You know, we just had Christmas. Everybody got gift cards, and you're like, wow, Starbucks is like doing amazing with all these gift cards. Guys, that's a liability on the company because they sold all this product, but they haven't given the service yet. So it's actually considered a liability for a little bit. Once a transaction actually occurs, someone hands them the gift card, they hand over the mocha cappuccino soy latte Vindi with sprinkles, and Brittany, I'm sorry, I got that completely wrong. Now there's been a transaction, there's been an exchange, there's revenue. Once a service has been performed. So if you have paid for the service in advance without receiving service, it's not revenue yet. However, if you perform service and you're going to bill them and receive money at a later date, because you performed service, it's a revenue. So it's not necessarily when money is received, it's when the service is performed. And that's going to be the difference between accounts payable, accounts receivable, and service income. And we'll go into that a little bit more. So, what is an expense? Well, an expense is an outflow of cash, use of assets, or incurring of a liability. Sometimes it gets confusing on what's a liability and what's an expense. An expense is you actually, the way I look at it is an expense I received. How do I want to say this? An expense, generally, you did not receive anything for it. Sometimes it's going to be deemed a liability versus an expense. If you paid the gas bill, the water bill, the wages for the secretary, those are expenses. You did not get anything tangible for it. A liability, you usually receive something tangible. I bought a backhoe. I bought hair supplies for my business, and they're sitting there, and I'm going to use them, but I still have to pay for them. I received copier paper to be used. So you've received something tangible that's very simplistic, but it's a good view. So when you go out and buy a new blouse, that's a liability because you probably put it on your credit card, which you shouldn't do. Business Math 101. But there's a liability. You receive something tangible. If you paid the electric bill, you stayed warm, but there was nothing tangible. Does that kind of make sense? Not to use credit cards or pay the electric bill. Yeah, we don't like them credit cards. You know what? I had a friend that she would put everything on credit card because she's like, I saved so much money. I bought all the kids, the stuff was on sale, and I couldn't afford to pass it up. And when I finally explained to her, if you don't pay it off at the end of the month, before you get interest, you didn't save anything because what you're paying in interest, you just cost yourself more money than the clothes on sale. So if you couldn't pay for the clothes in cash, you couldn't afford the clothes and you didn't need them. Exactly. So, okay, I digress. Start going into business math and CLD. Okay. Cost consulting, business sheets, slideshow. Okay, so we're kind of already done with that. That's kind of confusing. Okay, so, ouch. Sorry guys, my foot's hurting. So, just let me look at some of the things I want to do. What's the difference between, does anybody know what the difference is between accounts payable and accounts receivable? What is accounts payable and what is accounts receivable? Perfect, Stephanie. Candace, that's great. One's earning, one's spending. Stephanie is AP we owe, AR we receive. Excellent. Okay, I know it sounds really simple, but I've been teaching accounting and business math for over 2 years, and it really shocks me sometimes how many people get those confused. You're fine, Heather. So you're right. If it's an account receivable, we are going to be receiving money. Someone owes us money. Usually that's, we went out and mowed Mrs. Jenkins' yard, and we're going to bill her, and she's going to pay us on the 15th. So we have accounts receivable for $50. Now, when we post that, we're going to post service revenue, $50 because we performed a service, and we're also going to post a transaction in accounts receivables for $50, showing that Ms. Jenkins owes us money. One's going to be debit, one's going to be credit. And they're going to zero each other out, 50 and 50. Now, it would be a little bit different if, let's say, Bob's Plumbing came in to fix my sink because my grandnephew stuffed soldiers down the toilet, because he did, really. And Bob's Plumbing is going to bill me, and I have to pay it on the 15th. Well, now we owe, and we have to pay, so therefore it's an accounts payable, Bob's Plumbing, $50. That's a liability. Accounts receivable is an asset. Accounts payable is a liability. You know, when I say that we do this, that accounting is your personal budget on steroids, guys, we go through having an accounts receivable every week. It's called your paycheck. You put in 40 hours with the understanding that you're going to be paid at a later date. So you have a receivable account to Starbucks for $400. And I'm just using numbers, guys. So, and then it's amazing. Every week or every 2 weeks, depending on your pay schedule, you get the money owed to you. And then your accounts receivable is zero. You have accounts receivable for $400. You received the money. Now your accounts receivable is zero. You put in another 40 hours. You have accounts receivable. We all have accounts payable. Gas, electric, water, mortgage, insurance. They're all accounts payable. Some of us have owner's equity. We have a house, and we have a car, and we have maybe rent homes. So it's the same thing. We've all got it, just at different levels. Does that, any of that make sense? I want accounting to be as understandable as possible, and that you really deal with this every single day. It's just on a bigger scale. See, I feel like there should be music while I wait for people to type. Do, 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 do. Do, 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 do. Do, 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 do. Okay, Tanisha, perfect. So that makes sense. Okay. Perfect, Heather. That's one reason I love the Google Hangouts, is it's dyadic communication versus very one-dimensional. Perfect. Okay, excellent. And guys, if y'all need one-on-one, whether it's in my office, whether it's at Cafe Bona on the weekends, at Skyping, Google Hangout, whatever you need, call me. That's what I'm here for. We're not just one of those, you have to be in my office before I will meet with you. It's not. I'm here for you. Okay, perfect. So when you get your gas bill, oh, Heather, thank you. That's so sweet. When you get your gas bill, you have an accounts payable for $50, and it's due on the 15th of each month. Well, when you pay your $50, your accounts receivable now goes to zero because you cleared out that account. So you're going to adjust cash because you paid something out, and you're going to adjust your accounts payable showing that that balance was adjusted also. And then a couple of days later you get your new bill. I know it's a never-ending cycle and it gets really confusing. So one of the things about assets is a debit actually increases the balance, and a credit decreases the balance. So, and keep in mind, an asset is going to be cash. It's going to be accounts receivable, building, equipment. Prepaid rent is an asset. But, okay, so a debit increases. So when I bill Ms. Jenkins $50 for her lawn service, my accounts receivable balance is going to be debited, and it's going to go up $50. Okay, that's really cool. I like that. But then when and this is where it gets kind of confusing, when Ms. Jenkins pays her bill, a credit's going to decrease it. So I'm going to credit accounts receivable $50. Now I'm even. And I'm going to debit cash because I received money, $50. So now my cash went up. So you're constantly doing this. But at the same time, it equals because I had $50, I credited it, and then I did a debit, and it equals. Oh, sorry. So liabilities, a debit's going to decrease. So this is where accounting gets a little convoluted because a debit can both increase or decrease depending on what side of the balance sheet it's on. So liabilities are accounts payable, notes payable, anything payable pretty much. Now, accounts payable and notes payable are two different things. Accounts payable are generally a revolving credit, something that's going to be paid off within 120 days. Notes payable are large, long-term loans, car payment, building, large equipment. They are noted two different times because you're going to have long-term liability and short-term liability. So they are two different accounts. And then same, if the debit decreases liability, then a credit is going to increase liability. So when I get that $50 bill from ONG, I'm going to credit my account, so I'm going to increase my accounts payable by $50. But then once I pay it, I'm going to debit it, and that evens out. And I'm going to then credit assets for cash, and I equal out. This is all clear as mud. Bailey, it kind of sounds like it gets messy, but it really doesn't. It can get a little convoluted, I promise. That's why I love this cheat sheet. So, all right. We still got a little bit of time, and I'm trying to figure out what I'm sure after I work, a few problems, so yeah. It's not as, it starts, I'm just going to be honest. Accounting, some of you is going to click. And other ones is going to be, oh, Jesus, please just let me get through this class. You'll get through this class. You're going to be fine. If you're very analytical, it's going to click. If you're not analytical, it's probably not going to click, but that's okay. It works. The great thing is you're going to have a basis to understand how to operate your business or what's going on in other people's business. So that's the great part. Expenses, debits are going to increase, credits are going to decrease. Expenses are advertising expense, utilities, rent expense. Revenue, a debit decreases. You will rarely have a debit on revenue. When you will have a debit on revenue is if you, one, posted something wrong and you're having to fix a posting error, or two, someone wasn't happy with what you did and you have to refund money. Maybe they wanted red hair and they left with pink. Maybe they wanted a venti mocha skim milk frappuccino thing and they didn't like it and wanted to go to Rocket Brothers, and so you had to refund it. And I keep using Starbucks because, one, we all understand Starbucks, and two, Brittany works at Starbucks. You're going to be fine, I promise you. Oh, you don't work here anymore? Cool, where are you at now? Excellent, all right. That's cool, Brittany, I'm excited for you. Normal hours, I hope. With twins, you need normal hours. Excellent. From home? Wow. That is awesome. Cool. Okay. And I try, everything I do, I try to put into something you deal with on a normal basis. So that's, we have cosmetologists, so I talk about hair. We have paralegals, so I talk about that. It's the same thing if you're early childhood education. Accounting, okay, I have 14 kids. And I have 14 kids at $200 a month. I mean, 14 times $200 a week. So that's $2,800 in revenue coming in a week. Medical assistants, yes, I apologize. Same thing. So I'm getting $2,800 a week for 14 kids. That's awesome. Well, yeah, it is until you take out, okay, how much are you spending on, let's say they have to have lunch and 2 snacks. So how much am I spending on snacks and lunch? How much am I spending for workers? How much is my insurance? How much are the new regulations, and do I need new toys, and I have to make sure everything. So maybe out of that $2,800 that I'm getting every week for the kids, maybe my expenses are $2,500, so I'm actually getting only $300 profit. Doesn't sound bad. It's like, okay, I came out in profit, but what happens if, well, your air compressor goes out and you have no air conditioning? Guys, I got news for you. On daycare, if you are renting a business and you're responsible for the heating and air system, but you can't afford to replace it, by law, the owner has to go in and put it in because there's kids involved. So that $300 just went really quickly. So it's keeping up with a lot of that. Medical assisting. Okay, well, I saw 20 patients today. The average patient bill is going to be about $150. So wow, we earned $3,000 in revenue. Okay, you're going to bill for $3,000 in revenue, but then how much of it is going to be written off for contract allowable charges for insurance? Have you looked at your EOBs? They charge you $150, and contract they get paid like $35. Okay, so how much did I lose, and how much did I pay my medical assistants, and how much did I pay my front desk, and how much did I spend on needles and alcohol swabs and all that? That's where accounting comes into play. And it's going to help you as maybe you're going to be the head medical assistant. Maybe you want to work the front desk. You want to be the manager. Understanding when they're like, why can't we get something? Well, because there's no money and we got to justify it. Trust me, once you go through this account, this system, you're going to start realizing, just even as an employee, on why they're like, well, why can't we get this? Well, because we don't have it in the budget. Now you get why they don't have it in the budget. So see, I mean, it will click. I promise you. It all comes together, and that's one of the things I love. Okay, any questions? Whether it's about accounting, policies, procedures, my natural hair color. I love looking at myself. No, I don't. Sorry. Okay. Excellent. Excellent. Yay! Okay, so thank you, Etsy. I prefer being blonde, but my pocketbook prefers me being mousy. So remember that tonight you have your initial posting for your discussion 1. You also have assignment 1.1, which you have to watch 2 videos. I've watched them. They're both amazing. They're 15 minutes total in duration, and then you have to answer a quiz based on that, those videos. And that's it. Now, Yes, Will is amazing. He's done a great job redoing all the videos. Absolutely amazing. One of the things I want to caution you is there is assignments due Thursday, which is New Year's Eve. There's not a lot, but there are assignments. So please be proactive and get those done before you go out or on Wednesday. I don't want to count someone off 10% because they wanted to go out to dinner and everything. I get it, but I really felt like New Year's Eve versus working around Thanksgiving and Christmas, that it was just a little bit of work and that y'all could be proactive. Week 2 is intensive. There's a lot of homework. Don't just look at something and go, okay, well there's only one assignment. These are going to be multi-layered assignments. So it's going to take longer than you think. So don't start something at 11 and go, yeah, I can whip it out. You're not going to be able to. And if you do, you would not have given it your best. So you're not going to do as well. Okay, perfect. Not a problem. So do yourself a favor. Go in, look at things, and be prepared to take more time than you think. So it's heavy. It starts out okay. It's really heavy. Week 3, it comes down, and week 4, it's, oh wow, I can breathe before your next class starts, or you graduate. So does that help too? Perfect. Perfect. Okay. Well, thank y'all for tuning in. Let's see, I got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I had 10 out of 15. That is awesome. I know that sounds like not a lot, but that really is amazing. So yay. So same bat time, same bat channel next Tuesday, 7 p.m. In the meantime, if you need me, email me, text me, call me, send me smoke signals, whatever you need to do. Oh, don't worry about it, Christy. So, okay, I will see y'all later. Y'all have a blessed weekend and great new year. And see y'all next Tuesday. Bye, guys.